I don't sure. I don't come into this meeting a lot, but I saw due diligence and I'm like, I'm sure I could help you guys a few words, but I've been doing diligence in currently helping two of my companies raise money, raising their Series A and their first seed round. So, um, anyways, the questions from investors always different. You can't satisfy everyone. The only thing you could do is be very prepared of your product. Um, some investor only are asking questions because they want to show off how smart they are. So you need to be diligent of understanding your product, and there will be questions that you don't have it, and it's okay you don't have it, because some of their questions aren't proper. The main thing about going get the investor is the right investor for the right company. That's part of the problem with the with when you're going to go find investor is you're kind of pitching to the wrong investor. It's like barking to the wrong tree. You don't want to be going to this route. Just you can't just pitch to everyone. You're just wasting energy. They're not asking the right questions. That's why you don't have the answer. So that is key. Being very strategic about whose money you're trying to get. Then you find the right due diligence. And that was kind of part of the problem with when Chief was looking for, they have people pitching to money. That's why right now they're being very, very, they're making the changes of creating SPV to have curated matching the right investor to the right founders. So that's super important. So then be very specific about if they're asking you, the question is, if you want to be very specific, and I just reach out to me and I could kind of talk you through the specific, and I could tell you right now what's, excuse my language, what's BS and what's actual real right questions. Just last weekend, when my CEO got I kid you not, literally 2 page of a question from a investor that's going to just give him $5,000, because he decided that he wanted to show off how smart he is. And then 2 weeks later, he wanted to spend an hour of his time trying to ask for things that have nothing to do with the business. And not just the business, also the right stage of the business. Why are you like, are we talking about exiting when you're at a pre-seed stage? Why are you talking about that? You talk about the next milestone. Right stage, right industry, right business. It's very important. Lateral and horizontal, those things are important. The right spot is important. Those things will save time, and those things will save the amount of due diligence, right? So those are important.
What a
Sorry.
great start, Angela. You framed the whole entire discussion. Thank you. Let's start there. I think the thing that you pointed out is what are the right questions.
Mhm.
So, or else you're going to go on this sort of goose chase. You're going to go nowhere. So, talk about let's open it up to the audience. What are the biggest challenges you are facing during due diligence phase? Is it you're not asking the right questions, or is it right now you want to understand the due diligence, what it entails? Yes, Rose. Yeah.
Well, that's what I was going to say, like just setting the stage for when we're talking about due diligence, what really are we referring to as due diligence? Like how far in the process are we? Or is this, or, are we backed up to where we're saying someone's asked for information from us, and so we're exchanging information, but there hasn't been any like how early in the process are we? Right? That's more what I'm getting at because due diligence could have a connotation of, we're actually what degree of interest from investors do we really have versus closing closing a deal for them to fund us. You know what I mean? Like how early or how late. So I think that will be helpful. Pardon me, that would be helpful for my perspective, just to ground us all in what we mean.
ideally, what true due diligence is, they give you a term sheet and they're verifying everything that you tell them. That's true due diligence. They give you LOI or a term sheet. You say, good example, you say, my company is worth um, X. And they are saying, okay, I think your company is worth Y. And then somewhere you said this valuation is worth this. And you said the reason my company's worth X, or you guys say it's you, and it's worth you is because my my revenue is this, my cost is this, and then there's no problem. Then you get into the stage of due diligence. Then the due diligence comes into, is your company legit? There's any liability? The due diligence is to verify everything you're saying. That is true due diligence. That's true due diligence. Early due diligence is just to say, all what is very pre pre pre-term sheet is normally trying to ask you, what is your metrics?
Right.
Sure, they could call that due diligence, but really is to get, they could call that due diligence all they want, sure, but they're trying to understand your business. That's giving them an investor deck, trying to understand what is it that makes your company interesting. Those are,
Well,
those are
even
what it
access to
is.
data room. I'm thinking if you have a data room and they're peeking at it, I'm just going to refer to it maybe for the purposes of this discussion. Like there's little d due diligence, which is exchange of information prior to any terms or agreement, and then big D due diligence, which is the official, hey, we're coming to terms here, and so we're really going
Yep.
to dig into
So there's two
the
data room. The first data room is really just the deck and maybe some financial planning, but it's very basic to financial
yep.
planning. Then and then we do the second due diligence. Then you open up the second data room. So we always have two data room. The first data room, and the first data room, there's a track. So you want to track how often they open that track, how often they open your deck, because that data room is open to a million people.
Hmm.
You want to track who, because that data room, because you want a lot of people to look at your deck, right?
Hmm.
That is not closed. That just open to whoever who wants to look at your what you call it, the your deck and some basic information. Then the true data room is just closed to people who already gave you the term sheet, and that's the people that you are signed the term sheet. That's just between you and the investor. At that point, it is closed. That is just you and the investor. Unless something bad really happened, that is going to be your new investors. And that's the people who are going to be your investor, the lead person and whoever follow that VC. Normally one lead and a couple of small investors. Those are the only people who have access to that data room.
Yep. Yeah, I love that. I'm so glad we set the baseline. So that's what we're calling data room. Let's talk about like the big D in your words, Rose. So let's first dive into, if it helps, let's start with the little fundamentals. What do you guys currently have in your data room? And then let's talk about where are you getting tripped by the investor? Because I see founders, taking so much time preparing the data rooms, preparing all of the stuff for due diligence, and it goes nowhere because they trip on something the investors want, which we, aren't able to provide or we haven't thought much on, especially the risk side and compliance side. So I'm curious, let's start there. What has been your experience? And then Angela, would love your insights as well on where you see founders trip.
I can share. I have like a very unique scenario. So mine's kind of like a double sales situation because we are building for the investors. It's been very interesting where I'm getting a lot of organic traction where venture firms and emerging funds are like reaching out. They'll sort of do a demo with me. They'll ask for access to the product. That's kind of the first surface of what's happening. And then basically, like if they like the product, then the conversation either becomes, are they going to actually be a customer or are they going to fund this? So typically it's going in the direction of, yes, we potentially will use this, but it's not going in the direction of like, yes, we will fund this. Um, so that's been kind of interesting for me. But we did go into soft diligence last week, and it was really unexpected. But I think like the questions that came up for me were all around security of the product. What data essentially are we capturing from both sides of my users, which is the founders and the investors? And then the third one was essentially around, there were no questions asked on the terms itself, but there was more so like an ask of like, hey, within the next 60 days, are you able to sort of get your 60 users that are on your wait list into paid customers? So I was like, whoa, okay. Like, yes, we can try this, but there were no questions asked on like overarching. But I think that like what like to what Angela was alluding to, like knowing your product was definitely beneficial, because being a product developer myself and a designer of the product, I knew the ends of everything that was happening in there. So I was able to answer those questions, which again was a strong signal for them. And obviously, this wasn't meant to be a due diligence, but it ended up becoming like she literally said, hey, okay, so we're going to start your due diligence now. And they did ask me for all my like official like documents.
But did they give you a term sheet yet?
They haven't given a term sheet yet. Yeah.
Yeah, they need to give you a term sheet.
So that was my question, is like when you talked
They need
about
to give
term
you a
sheet.
term sheet.
Yeah.
You
So
have to have some leverage of, sure, you could look at all the things. I need you to give me it, like we need a term sheet. That's the thing about, and I see this all the time, right? Like I want to say 90% of my clients are men and like 10, I have a few female. The guys are not afraid of going for it. Like
yeah.
they're going out there and be like, I, yeah, I need those term sheet. They're taking one term, a fake term sheet to go fight for another term sheet. I
Mm.
work for a rocky company. We're out there, we we threw a party and raised $75 million without an engine in a freaking rocket. Like they got balls coming out of their, I mean,
Yeah.
I could do it. Like I've seen it happen. Like us, this is why I'm doing this. I saw this, I'm like, I gotta help our community do better
Yeah.
about asking for things that these guys are doing just blindly. They don't care. Yes, we still need to be super careful and not scare off investor, because
Mm.
I've scared off people before because they're not used to us doing that, right? We do need to be very careful. I'm not saying, hit on this way, but we have to toe the line still. But you have to say it nicely and say we want to see where we're at as far as understanding what the term sheet is. Otherwise, you're giving them everything. You need to kind of gauge what they're looking for, at least understanding how close they are to giving you a term sheet before you give them the world. I'm not saying, strictly. I don't know your business. Like, I don't want you to go and scare off your investor, right? Like, I can't. I don't want to do that. But you want to gauge your investor better than I do. You want to gauge where they're at before you give them the world. Just my advice is just gauge that before you give them everything.
That makes sense. Yeah. Thank you.
Great advice. I mean, just because they're asking it doesn't mean they're really as serious. But term sheet means they have some level of skin in the game. They
Yeah,
put the effort.
put in the effort, push back a little bit at least,
Yeah.
um, and just gauge a little bit, because the thing is, people will push until you push back. And, I, I get it. Beggar can't be choosers. I understand that. And I've been there. Um, but you want to hold your grounds a little bit.
Mhm.
They people will push until they can't.
Well, what's interesting is like listening to this discussion as with like any business dealings, we as the founders and leaders of our organizations beyond the specifics of the due diligence and the exchange of information, we're demonstrating how we will show up as leaders. We are demonstrating how we will negotiate as leaders. We are demonstrating all of that in those interactions. And so to be direct, to be to push back in a respectful yet challenging way, to understand the aspects of our business and be able to convey that, like that, means I think, representing ourselves in that way and showing up in the best light possible can only benefit us, as investors are evaluating not just the company, but you as a leader and your ability
Absolutely. Rose
to
is
take their
absolutely
money
correct.
and drive forward with it
Yeah.
in other business dealings.
Yeah. And they're
So,
watching how you lead the money that they're going to give you. They're putting in money to the company. They're also putting money in you. If
Yes.
they see how you're able to kind of firmly say, hey, I'm going to do this, they're seeing how you're going to be running the company that they put money in. I'm like, okay, well, he's pushing back. That means in the future, that's how she's going to run the company in the future. I mean, you're, of course, you need to be respectful of them, but they're betting money on the company. They're also betting how you're going to run the company as well. You know, obviously, we're all going to be very respectful, but we got to be very they want you to they want you to care about the company as much as they care about the money they put into the company. So Rose is 100% correct.
I love that. Great insight. I think we forget that. Think about our corporate backgrounds, our interviews. It's all about questioning the question, not answering the question. And that's what, at least as we as interviewers looked for. How well do they question our question? And that shows their thought process. And I think we forget that as at times as founders. So I think you're right, Angela. Like how we show up is extremely important in these conversations.
And if you right before you have to talk to them, if you need to kind of get the mindset before that, talk to Shadishna and talk to any other person. It's not about whether we're timid or like, just like get your head straight to kind of, like, and then before you talk to them, talk to other, just have a conversation just to get your kind of like mindset different. Have a conversation with your fellow founders to just get your head straight before you go talk to them. I think you need that. We all do. Trust me. I sometimes will wake up in the morning and everyone's like, "Oh, Angela, you're able to." I wake up. I need to go talk to somebody before I hit and get into a boardroom and get my mind straight before I talk to somebody. It's important.
Yeah, this is really wonderful learning for me because, I feel like I could present myself as firm, but I didn't know that I should demand a term sheet. I thought that it's the regular process that they're, getting their questions answered about how you're going to make money and how much money you're going to make, and whether that's based on their, behind the scenes standards that fit with how, who they want to invest. I just naively thought about that. I didn't think about it, all the other side of it. Like they're testing you, see whether you, ask the right questions and stand your ground. I didn't think about that because I didn't know that I should ask for a term sheet. But I also had experience with some smaller angels. Instead of showing term sheet, after the pitch, they'd ask, "What's your term sheet? What are your terms?" And so that is another question that sometimes, I'm not entirely sure what's the best strategy to answer because those smaller investors normally they would look for a lead, uh, and I wanted to determine the for example valuation cap with the lead and to get a high a valuation cap as high as possible. So I didn't just want to give out a number to a smaller angel, because it's not guaranteed to have to be the best um, deal. So yeah, so I see that coming from both sides in terms of term sheet. Now I know that I should ask for a term sheet. Uh, but like also how to respond to people who ask for a term sheet from us. Um, could get some advice.
Yeah, I mean, they're looking for a number from you, so so they everyone's always looking for a number so they could uh they're if the number is bigger than theirs, they could always pull you down. If the number is smaller than theirs, they don't have to, you know, they don't have if their number is if their number is smaller than theirs, they just save some money. If the number is bigger than theirs, they could, you know, they could pull it down. So it's beneficial to them to have them give you a number, have you give them a number. Um, so that's why they're asking you for a term. You're asking them for a term sheet is not you giving them the term. There's a difference.
Mm,
Asking them for a term sheet is asking them for a commitment. It's two different things.
mm,
So that's why they're asking you for your terms. Your term is asking you for a price. You're not
mm,
asking them for it's you asking them for a term sheet is also you asking them for the price. They're asking you for a price. They're just asking you for the same thing.
okay.
You're telling them, you don't want to give them any more information until you get some commitment. There's two different things.
Mm,
So if if you the terms it's the price itself is going to be determine how much you think you're going to need to do some homework about how much you think the valuation should be.
mm,
And you need to do some market homework around your business. That's going to be
mm,
homework you have to do for yourself. I
mm,
mean, at early stage, it doesn't really matter. I mean, for the most part, people are doing safe right now. Anyways, so do the safe, get some cap. Who cares at the beginning? Honestly, go find go find something similar for now, and then later do some 409A and call it a day. Right now, you just need some money. The most important thing is they want to know how much money you need and what the money's for. That's the most
mm,
important thing.
mm,
And don't take as much money you need. Don't overtake money because you don't
mm,
want to dilute yourself.
mm,
That's the most important thing. Figure out how much money you need, what the money's for. Take as little money as possible, and
mm,
then give them a max. Bootstrapping as much as you can and go there.
mm.
And these are very good insights. Let's come back to due diligence. And Angela, maybe you have the most experience here. What would you say? Like, what would you say in terms of the disconnect you see in terms of what founders prepare for and what investors ask and where they fall short? And how can we as founders be better prepared um, so that we don't enter in a situation like this?
So it depends. If you're talking about small d, which is, the initial information, I would not over prepare.
Hmm.
Because I don't want the last thing you want again is barking the wrong tree. The big D is you're not going to know what they want until they give you a list of all the things they want. For the most part, big D is your incorporation, all the legal docs, all that stuff. You're going to already have that. Just put all the stuff in the thing. It's your incorporation doc, all your legal documents, and all the all agreement, all that stuff. You just stay organized with your paperwork, then that should be very easy. Have some kind of uh, KPI, uh, all your data with your data. If you're building your own product, you should already have those information. And when it comes to what kind of information they need as far as verifying their things, those are the things that you already have when it comes to understanding your product. If you're stressing over your DD, again, overly stress over your DD is not the way to go. Understanding your product is the most important thing. When it comes to big DD, it's literally they will give you a list of things that they want, and then you go tackle the list. They will give you time to build the list. It's really, due diligence is not that hard. It's all the things that they need to verify, is your lawsuits. All this thing is really just paperwork when it comes to the big DD. It's all paperwork, because once they give you the term sheet, it's just verifying everything they say. It's a before the term sheet, it's all the questions. It's going to be exactly a crudity is exactly what you're saying, is verify, is all the things that they want, is all the KPI, is how you're going to help them make money, and all these other things. You should already know all this stuff. I want to make sure you don't over prepare, because you might be preparing things that they do not want. It's my concern for most startups and most founders. You're overly prepared. You're preparing things that they don't want, and you're preparing things that they're not going to ask. You're going to prepare things that they ask. They will give you a list of things to ask, and then you go and tackle. They will give you time to get the things that you want. And I that's at the end of the day is what I'm going to tell you, is only give them for the things that they ask, and over pre-preparing. And every investor is going to ask for different things. The only common thing that they're going to ask is all your legal documents. That's one thing that everyone's going to ask. It's all your legal documents, all your PIA, all your patents, all your lawsuit things, and all your IRS, and all your article incorporation. Everyone's going to ask for that, and just, you already have those. Put them all in a thing, organize all your paperwork, and you're going to be fine. And that's easy. But as far as your product and your KPI, you should already have that as far as management is concerned. You want to know your margins. That's the most important thing. And depending on your product, right? Like, you want to know your margin. If you're doing a physical product, then you want to know how much money, what your revenue is going to be, and what's your margin is going to be. You should know, as a founder, you want to know what your margin is going to be. As a software, and you want to know your CAC. You want to know what it costs. Very easy. Unit economics, CAC, your LTV. Super to understand. They're going to want to know these things. Your LTV is how much money you're going to make a long term. What's your value for every customer? Again, every business is going to be different. Are you going to build, are you developing a drug? I don't know which business is going to be. That's going to be a different kind of information. How long it's going to take you to build a product? Well, thankfully, I've done all the industry. When you're building a robotics, how long is it going for you to deploy a robotics? How long is it for you to deploy all your robotics? You're building a drug, how long is going to be your clinical trial? For your SaaS, how long is going to be your how you're going to convert your user, and how you're going to make money, and how long it's going to take your free. Those timing is important. Timing is important. How much is going to cost you. CAC is how much it's going to cost you for each of your customers. So in CAC, and you guys know what a CAC is, right? Cost of each customers, cost of each users. Those are basic KPIs. And your CAC is basically markets, your marketing cost, your sales cost. And unit economics is what's the COGS, that includes your AWS. That includes, right? You have your AWS, you have your engineer, and how much is your engineering cost? Those things that applies to a lot of things. Robotics is going to be your bomb. Your let's see, what other things I've done. Medical device is going to be how much is going to be your bomb. Drugs, how much is going to be your clinical trials. Whether if you're going to build a rocket, how much it's going to cost you for your rocket's going to cost. And then if it's going to be if you're going to be a service for a rocket, the depreciation for a rocket, that's going to be how much it's going to be your maintenance expense. Those are RAS, rocket as a service. That's a different model. So there's a model for everything. Margin, margin, margin. Unit economics, LTV, those are the things you need to get. Go to ChatGPT, those are the terms. That's what they want.
I love how you crystallized it to basic fundamentals, Angela. It's
Yep.
always the same stuff, regardless of which field you're in. Time,
Yep.
cost, and margin at the end of the
Yeah.
day. And it's all these metrics are combinations of
Yep.
that. And being on
No
top of
matter
that.
what industry, it's those metrics. It's just
Exactly.
those metric within the industry. You find a way within the industry. I mean, at the end of the day, even you're building a drug, it's whether, because even if you're building a drug, there's always margin. You're building a drug right now through the clinical trial. After all the clinical trial, you capitalize it, and eventually it's gonna you capitalize it's gonna depreciate the capitalization. That's your margin when you sell the drugs, right? When you sell the drug, even though it doesn't apply to you guys, you convert that into when the sales girls are selling the drug, that's your CAC right there, right? And then the cost of that R&D and that clinical trial will go back to that, and that's your margin right there. It all goes back. I mean, you think R&D now just going to go away? No, it doesn't go away, because those people who put in millions and billions of dollars, they just go away. It's going to come back. They're going to get their reinvestment coming back. Every dollar comes back, and they're going to get their ROI coming back. And then they're going to be like, when am I going to get the money back? They're going to get the money back. Thankfully, none of you guys are building drugs, so it's simple. And then you guys don't have to worry about it. So I put it very simply. And then when I have to spend hours building those freaking model, then it's not so simple.
But I like that. It's very
Simple when you
simple.
do it.
But it is simple. I think we as founders make it too complicated in our heads.
Yeah.
What other questions do you have before we dive into our last few questions?
Yeah, I have one question specific to like safe and like structuring
Yeah.
sort of the overarching like ask, right? So let's say like your ask is like X million dollars, like $5 million. And then like you say that this is gonna be a phased approach. Um I think like the the part that I'm not familiar with is safe, and what I've been recommended is like, okay, put a safe and then you can raise, let's say, like 500K, and then
Yeah.
that phased approach goes towards, like, I understand that like the phased approach goes towards your milestones, right? Like, oh, I reached X revenue, and as a result of that X revenue, you give me the 500, and that, or rather, like, to get to the 500, you give me that, and then I get to the next milestone. So like I'm just trying to understand, like, how does this typically work? Like, is it the same investor? Can you have multiple investors
Well,
doing?
the safe doesn't necessarily mean it has to be milestone.
Okay.
It's safe is not automatically milestone. It's not automatic. Right now I'm doing 3 safe that is not milestone based. It depends on how you want it, how you determine. You said safe is basically a future equity. You said it's another form of loan. I'm like, I am
Mhm,
now opening up a safe. You
mhm,
just invest until the next price round.
mm,
A safe is a great way for them to invest now, because normally a safe, just like a convertible note, they get a discount. So let's say right now I'm investing in you,
mhm,
I get a safe. Normally safe gets a discount, or a cap
Mhm.
or both.
Mhm.
So it depends on what you're offering. Let's say your safe is you get a 10% discount. So let's say next time you get a price round,
Yeah.
you said, I'm offering a safe right now with a 10% discount. Okay. I'm putting in 100, $500,000. I
Mhm.
get with the 10% safe, 10% discount. Your next price round is whatever it is, a 10 million valuation. I automatically just gain 10%.
Yeah. Okay, that makes
Or
sense.
if you're really desperate and you want to attract them, you said, okay, my safe is now 10% plus a um, a 10 million max cap. So if the next price round is a 20 million a 10 million valuation, I just gain a $10 million a
Yeah,
gain.
yeah,
It's a easy. And by the way, a safe is a equity on a balance sheet. It's a sure win,
right.
but only if they believe in you. So a
Mhm.
safe it's an easy way to get someone to sign a check, which
Mhm.
is not a big deal for a founder to someone to write a quick check. I would offer right now, a lot of early founder would offer a safe. It's
Mhm.
not that big of a deal. Like people, it's faster for people to write a couple $100,000, depending on what you want.
Mhm.
So for quick money for you to just get it done, and if you're desperate for some money.
Got it. Yeah, that's super helpful. Thank you.
By the way, safe, not a lot of due diligence. By the way, they don't even go through due diligence.
Yeah.
Only
Yeah,
a price round go through due diligence. By the
right.
way,
So
they
that's
just
good
write you
to
a check.
know. I mean, that's really good to know because
Exactly.
yeah, maybe
Yeah.
Angela, like I'll connect with you one on one because if you're open to that, because yeah, I'd like to know a lot more details on like this situation that I've landed in, and
Yeah.
yeah, it was an unexpected situation, so I'd like to be more prepared for that.
Yeah. Trust me. Safe and convertible note, no due diligence.
Okay, that's good to know. Right.
I mean, right now people are just like, because it's like a bridge for people before they do go and raise a round. And then normally they're like, look, you explain to people, you
Yeah.
write a $500,000 check right now. On my next round, you're automatically going to, like, even if I raise my next round's going to be, let's say let's say your cap is $20 million. Even if I don't, the next round isn't at a valuation at 20 million,
Mhm.
you're going to get a discount no matter what. Normally there's a discount plus a cap or
Mhm.
just a discount. No matter what, you get a discount.
Yeah.
That's an
It's a
easy sell.
win-win. Yeah, it's a win-win for founder and the investor, Kruti. So go
Yeah.
all for it.
They'll write a check like,
Yes.
Yeah.
But make sure again, don't get over diluted. As Angela
Mhm.
said, just because a person is willing to invest 200,000 and you really need 100, just, stick with what you need because you're going to over
yeah,
dilute and you'll realize it later on.
yeah.
Yeah.
Take what you need. Don't, I mean, I know money sounds good, but if you know you're close to getting some revenue, the best
Yeah.
way to get, I
Get the
mean,
revenue.
if you could, I mean, the first thing I go to any company right now is write them a pathway. I
Mhm.
build them a model, a pathway to break even and profitability. That wasn't like this. I mean, I've been doing startup my whole career. That was never the way back in the day. You remember watching what's that HBO show?
Shark Tank.
No, I think it's called Startup. It's
And
Silicon Valley.
Silicon
Silicon
Valley.
They're
Valley.
like, they're like, no profitability, no
Yeah.
revenue. No, 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 no. We
That's
want revenue. We want profitability. Because before, I will, they're right. I live in Silicon Valley. Before, we raise money off of potential. We do not want revenue. I never build a model off of profitability. I never build a model. Now, every single one, I'm like,
not.
profit, 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 because we want to able to be self-sustaining.
Yeah.
Like any founder said, "Oh no, we want to keep raising money because VC want us to keep raising money because they want to keep doing." I'm like, "No, we're not doing that. We're not doing that."
Yeah, always remember the motive of the VC is different because the more you
Mhm,
raise money, you look good on their in the portfolio economics
mhm.
that they made, there's an ROI on their fund. But
Yeah.
it does not mean it's good for you.
Because management, I'm part of the management, right? When we raise money, we're not running the company. It consume all of us. You have to understand, before I was a fractional CFO, I was part of the company. I don't get to sleep when we're raising money. I'm like working 90 hours a week. I'm like literally, me and the CEO is on the phone overnight. We literally take shift. I fall asleep while he's on the other side. I'm not doing that shit again. He's calling my husband in the bed. Is Angela still there? Like it's ridiculous. There's no boundaries. I'm not doing that again. I'm in Hawaii with my husband and he's calling me. Like it's stupid. That life I'm never gonna live again. We're not raising money again. And I don't want to work for a guy again.
Plus to that.
With Angela, you get unfiltered, honest view of the world. That's the world we live in, unfortunately, Angela. Any questions, like any pain points you guys are facing as you are going through the DD process or working towards it?
Yeah, I think I'm a next step. I'm going to shape up our data room again. But so grateful to hear your advice, Angela, not to over prepare. And now I also think that I heard that we probably need a different data room for every investor because there are overlapping materials, but there are things that they specifically look for that other people are not looking for. So don't pack the data room with a ton of information based on what we hear from this investor and that investor. Just really have all the content prepared when it's feasible for us that we think makes sense, and then share the subset based on what an investor looks for. And it's also very informative to hear that each investor will actually provide a list of documents or things they are looking for, and give us time to prepare. So I think that is a sort of a comforting information to receive
And
instead of
it's normally
hey, we have to
and
be.
it's normally after they give you a term sheet.
Mm, I didn't know about that, and I've been working so hard to prepare information without a term sheet. So now I know. Now I know that, I need to get that.
Yes.
Normally.
Well, and I would also say use your judgment. It's not necessarily a demand per se, but based on where you are in the discussions and how much back and forth there's been, use your judgment about the seriousness of their intent. We talked about gauging earlier, gauging their real interest versus chasing your tail on an exercise because they're just kind of stringing you along and they're not really sure.
Yeah.
And so you'll need to use your own judgment. And if you have a co-founder and others who are a part of those discussions to really understand where they are in the spectrum. Are you like back at little d and then they're having you chase your tail on some documents that maybe aren't as, readily available or pertinent? Or are you over on this side where you're closer to the term sheet and so you really might need to tighten some things up?
Mm,
You know the investor more than I do, right? Like gauge. Rose is correct. Just gauge. If this is somebody really close to you and you're thinking they're close and they're just needing a little bit more convincing, then sure. But if they're just asking the world and they're not even close, you can't satisfy everyone. Like
mm,
if you got 10 of them asking everything and all the things, no, like don't waste your time. But
The other thing I think about is that we all would love like cash infusion, at what cost? Like, what is that going to cost us? You know, Generally speaking, having access to capital allows us to invest more in the things that we're passionate about and building towards our vision. So that's wonderful. But at the same time, I think of the words of wisdom, like don't raise when you need it. Don't In other words, don't be desperate.
Yeah.
Because if we are in a place where we really need it, then it's going to influence the way that we approach those discussions because we feel like we need it. And so we might want to bend over backwards. We might want to twist shift our perspective on who it is that we might consider to be good partners. Yes, investors, but they are partners and we'll have to work with them. It's like, we're getting married. So somebody's going to be a part of our lives, chirping in our ear, potentially, depending on the type of investor they are. So, we might be more inclined to compromise on some of the things that we believe are important in that relationship if we're desperate, if we need cash flow. So, keeping that in mind as well to keep us kind of balanced and rational in those discussions is another thing that I think about.
Yeah,
100%.
I definitely think that Rose, you tapped in accurately on that. Just in the interest of time, I know we will end our meeting soon, but Zuni, I just wanted to offer, like, if you wanted to test our product and get prepared for some of these discussions, happy to like have those conversations with you to see if it actually helps you. So feel free to connect with me on LinkedIn, and yeah, we can chat more if you like.
Yeah, totally. I think one thing that I think Angela softly mentioned is that there's this whole preparation side, which is very sort of, tactical. But the strategic side is the negotiation side, in which the mindset is important, the kind of questions you ask is important. And I truly feel, I don't know what you think, Angela, that's where founders fall short. It might be the mindset, the timing, bending over backwards, as you said, Rose, but we are not negotiating. We consider this as a one-way convo. It's a two-way dialogue. And yeah, any tips, Angela, for this group based on how you have navigated this so that you are in a position of leverage as a founder?
I think it is, you want to listen more and see where they're at. Don't jump into answering everything that they ask. Um, they're gonna they're gonna like see where they're gauging. And I think there's a lot of strategy around what I would research what their thesis are as much as you can. I think how experienced they are as an investor. You have to understand if they're VC, depending on who you're talking to, strategy is important in a sense of who as an investor they are. There's so many VC out there. There's a lot of young GP right now. If they're venture capitalists, a lot of GPs are generalists and they don't know what they're talking about. And they're just trying to just throwing stuff out there. And strategy is to make sure that they're not just trying to um, say things and then leveraging to get the best deal possible. So that's one thing. The other thing is if they're really experienced and they're really just trying to understand the product and they're really smart, that's a different strategy because understanding who you're talking to is because you don't know, right? Like if you're talking to someone who knows the product really well and it is a collaboration discussion, then you know that this person is out there to kind of work with you, are actually going to be a future partner. That's a different discussion. And if you're talking to a GP, they're out there just to get a good deal. That's a different discussion. Very important when it comes to strategic, right? You got different VC. It is okay. Money is money because you got the leads and then you got so you're talking a couple of VCs and and somebody there's three investor, one's going to be a lead and then a couple of our small ones. The strategic partners may be the lead or the people who's just giving you money may be the lead. So different strategy is going to be different with who you think you're talking to. So be very strategic about who you're talking to. Find out what their motivations are. That is your best strategy when it comes to understanding the person you're talking to. And then because the valuation is going to be set and then everyone will follow. So understanding who your lead's going to be is the most important thing. And then everyone will follow. It doesn't matter. So that is the most important thing is who do you think has the biggest pocket and who's going to be the one taking the lead? And the person is going to be then that is the best strategy. Sometimes if your partner, the visa you're talking to is going to be a partner, you know it's going to be a future partner, then you don't necessarily need to worry too much of it about the valuation because you know they're going to be a future partner who's going to come back and continue to support you, and they're really going to believe in your product. Because right now I have a client that they bought a safe and they came back and say when you're ready to do a Series A or series a pre-seed of a price round, we're ready to put in the money because you have to think about the future rounds on top of the current round. Think about the future. Don't just think about your current round. How are they going to support you in the future? It's not just now, it's the future you also need to think about. It's not just how much valuation you could get now, it's who your partner is in the future and what are they going to be doing? Are they going to gouge you now and then it's going to be a crappy partner in the future? So that is the best strategy is who are you going to be a partner with right now?
I love that insight. Yeah, so do due diligence on the VCs. Don't consider it as due diligence on you. And I love that the kind of VCs they are, that shapes the way you negotiate or the way you proceed with them. Like even proceeding is like find the right VCs first, and once you have that, approach your strategy based on what their motivations are.
And they
But that's
could introduce you to
Mhm.
other VCs,
Yes,
futures.
yes. Okay, guys, we're over time, but this has been an amazing discussion. I hope all of you took a lot of notes. Thank you, Angela. You were sort of, the expert
I'm
of
sorry, I
this.
just jumped in. I'm
I'm
like, oh,
so
there's a
glad you
call.
did.
I'll just come in.
So glad you did. And you have Angela, you have all of us. Feel free to reach out if you have any questions. But thank you
Just
all for your time.
yeah, reach out anytime, guys.
Thank
Thank
you.
you so much.
Thank
Really
you. Happy
Have
interesting.
a
Friday.
happy
Thank
Friday.
you.
Bye, guys.
Happy Friday.